After a couple of less than stellar days in the markets, it looks like there may be some bumps in the road. Our next guest says we should proceed with caution. Joining us, Charles Nenner, founder of the Charles Nenner Research Center, and until a couple of months ago, he did market timing for Goldman Sachs for 12 years. Charles, thanks very much for being with us.
Welcome.
Okay, where are we headed here? You're cautious. Why?
Well, last time I came on, I think in February in the big mess, I mentioned that I see the S&P go to around 1,000. I think we saw 962. I wanted to come last week. I couldn't come. We have been selling already the stocks, including stocks like Mosaic and Potash, because commodities like corn also gave a sell signal. So I don't think you can hide in there over there. My clients mentioned there was a big problem because they thought they would be safe hiding in treasuries at the low of the market. And then after that, the treasury funds came down 20%, so people are in disarray. So I brought today a treasury chart to show what we can expect of the treasury market for the next couple of years, so people will not get totally hurt over there.
Can we put that chart up, please? Here we go.
There it is.
Now what you see here is the bonds are on the top in yellow,
Yep.
the yields, and my cycles show that yields are going up till April 2013. You don't see yet the yields going up because I sent it out months ago when yields were still at the low. So I said everybody out of the bonds because bonds are going to turn around and this is a longer term move.
All right, if yields go up, the price is going down.
Correct.
That's kind of an easy one, isn't it, Charles? I mean, with all the money we've flooded the world with, we're going to have inflation and we're going to have higher rates.
Well,
I don't need cycles to know that.
Well, if everybody knows everything, then it means you don't need me anymore.
What about when you mentioned commodities, though?
Yeah.
You mentioned corn in particular, and some of the corn-related names or fertilizer names. But I wanted to ask you about something Bob Pisani mentioned, which was Freeport-McMoRan. It's down 20%. He just gave that as an example. Is your call commodity-wide?
Yes. Also, copper is close to a sell signal.
And oil and everything. I mean, so
oil, we said we're long oil, and we're selling if it closes. The July contract closes below 69. We have a cycle high by the end of June.
So here's my. Oh, sorry.
Go ahead.
Okay, I'm saying so Treasury prices are going down. You're cautious on stocks. You don't like commodities.
Let me just.
You're going into Haynes' hole in the backyard.
Yeah, you're coming into my backyard to bury your money.
We have a small bicycle on bonds, so we see a little bounce for a couple of weeks, and then yields will go up again after that.
So big picture, then where do you go?
Right, into 2013.
Now, you are strictly a technical analyst, right?
No, I'm not a strict technical analyst. I don't know if you can show the other chart that I brought. I do all the economic indicators. It's just that I don't have to look from day to day because markets are based on what happens in the next year. So here you see my ISM index. It was sent out a year ago, and it says the ISM indicators go down into March 2009. So we predicted it also. We do the GDP, we do all the economic indicators.
Okay, the reason I ask is this. So let's take copper, for an example.
Right.
The Chinese are going around the world,
Right.
buying up natural resources everywhere they can,
Right.
Australia, Africa, Latin America. Maybe copper goes down for a week or two or a month or two, but long term, aren't these basic building blocks a great investment because you've got China out there buying everything in sight?
Well, I work a lot with the Chinese. What happened with the Chinese is they got official agencies that store up commodities. They're very savvy. They really know what to do. When the central banks years ago were selling all their gold, then they were buying it, and they were right. They did the same thing on copper. For them now, I know they find now the copper price too high. It's not that they really need the copper. There was a lot of speculation the Chinese did, and it did very well. So according to my information, not based on cycles, I don't think that they're going to continue to buy copper at these prices. And also because I tell them that cycles are turning down, so they can wait now.
Well, I mean, it does. I mean, in a sense, that does jive. I mean, Freeport-McMoRan, has been telling me that they did think it was stockpiling as opposed to use for, actual building. I mean,
you see,
they're buying. Who cares why?
I tell you why. Because everything is based on hope till now. And the hope came up once the cycle bottomed. The psychology changed. That's my work. And then the hope came up. And now that cycle stopped, people will go back to reality, say, listen, everything was on hope. everybody was based on survey. Let's look at the numbers, and the numbers don't look that great.
So is there anything that you would be buying or seeking refuge in, not just for the next 2 weeks in treasuries, but I'm saying over the next couple of years?
I would look for the next couple of years to see refuge in gold stocks.
Gold
stocks. It's a bit too early. Gold stocks. A couple of months, a month and a half, 2 months. Usually, I think gold stocks will outperform gold. And for the rest, you have periods that there is nowhere to hide.
All right, Charles, thank you very much.